Welcome back to Beyond the Stock Market, a Groundfloor production. I'm your host, Brian Dally, CEO of Groundfloor, and we're back for part 2 of our conversation with Patrick Donoghue, Groundfloor Lending's VP and General Manager. Patrick, thanks again for being here. Let's dive right back in.
Absolutely.
I want to continue the conversation and talk more about capital trends as well as get into what's new at Groundfloor Lending. You've been here for 10 years now, as we discussed before. In startup years, that's like a lifetime.
Mm-hmm.
And you described it well. It was definitely a startup. It was a small startup when you joined. And you've seen us grow from those early days, kind of proving out a new model for real estate investing that nobody had really ever tried before.
Right.
You had the vision to see it, like it, and then join it. Thank you for that. Now we've done well over $1 billion in loans. We've done well over $2 billion in investments on the platform. I'm genuinely curious, what has that journey been like from your perspective?
Worth it. I think the surprising and fun and rewarding aspect of it was building it, right? I mean, had I joined XYZ mortgage company or XYZ commercial lender, the process has already been built out, right? Here, I got to take a big part in building those out and how I envision that to be, right? And make that work, right, in a way that we could grow. And I came as an operations director, right? And that put me right squarely in the development phase of how we take, that's the manufacturing, right, phase, right? How we take it from, sort of the sales point to the closing point. And we really did need someone, right, at that point. And it's been very rewarding, not without a lot of headaches and turmoil, but we worked through it. And like I said before, I called you on October 30th, 2016, saying we did 20 loans. We do that regularly now. And I would also say that infusing what we could from a technology standpoint into that process was really unique to Groundfloor because we didn't use an out-of-the-box system. We built our own. And there's something to say about spending your career building something, and I find that rewarding.
Yeah, I can identify with that. You tell the story about calling me about, the 20 loans. I do remember that as being quite a highlight. I didn't remember the date, but you did. What were some of the biggest challenges along the way? And are there any stories that sort of stick out in your mind that you can share that give people sort of an inside look at what it's like to build something like you helped to build?
Well, there were so many challenges that were rewarding. I definitely remember coming to Groundfloor and sort of needing to explain what a closing settlement sheet was, right? And simple things like that, which was a little eye-popping, but it made me, more valuable, I guess, in some but, I think that and honestly, the people for me is where, the group that we've attracted has been like the most meaningful part for me. And as watching, those core people develop in their careers and have every much of an influence on it that I did, that's really meaningful. And I would say what I remember is the landmarks. I remember hitting $1 billion in repayments very much. And I remember you and I high-fiving that, and it's easy to give it out. It's harder to get it back, right? So that was very monumental. And then any milestone eclipse, 100 in a month, or I think we had T-shirts that said 200 in a month, right? And so all of those rallying cries and, some of the, the downturns like in COVID and what we experienced and, that's been challenging. So, it's all been very rewarding though, even the challenges.
I think, in the early days, I think we made so many culture and people mistakes.
And I'm glad that you said that.
Those were painful.
Right.
And those are on me. Those are not your mistakes. Those are my mistakes.
Yeah.
And I learned a lot from them. Can you talk about how the culture changed
Oh,
over
yeah.
those years and sort of what you experienced maybe in the industry? Because I learned the industry can be kind of a hard scrabble, rough sort of culture in a lot of companies. I think we were on the verge of importing a lot of that into our company, and then we changed direction. But can you describe sort of how the culture has changed
Yeah,
inside the company and why that matters?
I mean, the puzzle piece was fintech and sort of mortgage people. How does that work?
Right.
And it didn't always, right? But I think it attracted from like the real estate side, it attracted, you know, smart people that saw the difference. I think our culture is highly intelligent. That's one of the things that was attractive to me when I joined. And, I think by and large, we've retained the sense of, you know, a good community, right? We honor transparency, we honor authenticity and commitment. And I think that has largely held true throughout the years. I think that you took a firm stand on that in about 2017. And I think we've been highly consistent with that since that time.
I think
Yeah.
Patrick was on a phone call that I was doing from, not proud of this, I was doing from, and Kieran, if you're listening, you may remember it. I was on a ski trip in Park City. I was on vacation with Kieran. He was probably, gosh, I guess if it was, he must have been 12.
Yeah.
And, the lift's open at 9, we're ready to go. I'm trying to wrap up a meeting as it's coming up on 9 o'clock. I'm on my phone out, in my ski gear with Kieran. He's ready to roll. And it was a real wake-up call for me because here I could not get off this call. You were on it.
Yeah.
You were not one of the bad actors on it. Thank you. But people were screaming at each other.
Yeah.
And it got so unprofessional. And I thought, oh my God, as a founder, it's one of those moments where you're just like, what have I done?
Yeah.
And I appreciate that you stuck with us through that. And I think you talk about the opportunities that are created for people now and sort of how people have come together. How do you think we overcame that?
Well, I know there's a commitment to treating conflict in its space, right? Conflict's not inherently bad. In fact, it's very good, right? And, you read things like the dysfunctions of a team, 5 dysfunctions of a team, and conflict's at the root of progress, right? And I think we're just better able to professionally engage in conflict, largely by adapting some of those principles and all those principles. You were a good leader, a thought leader in that, and I've tried to adapt that into the unit. Conflict isn't the problem. It's how you go about it. And the point of it is getting to the other side of conflict.
Well, and I can admit,
Yeah.
coming from where I came in my
Right.
career, I saw a wide variety of conflict, and I was sort of mentored to like stoke conflict in
Right.
some ways. And I had to grow up around that in order to sort of create the kind of company that we could be proud of. So thank you for being a big part of that.
You're
That's a little bit inside baseball, paying attention to that. Let's zoom out a little bit to the market and people maybe if they're investing in this or they're thinking about doing business with us to finance real estate projects, they may be interested in some of these questions that are coming up. Thinking about 2016 versus today, I mean, what's different about how real estate entrepreneurs are financing projects? What were they doing back then that now has evolved? And how should people think about their financing strategy in today's market?
Okay, well, the major difference is availability of capital for a fix and flip project or a new construction project. In 2016, our space, for lack of a better expression, was very new. Actually, from a national lender standpoint, most of the money you mentioned hard money Harry. I mean, that's a very good descriptor. A lot of people that I know and love are
that was literally a cartoon character we created around the office.
And that's where people would find a phone number and probably like a real estate meetup and this person lends versus, and shout out to, they were called Lending Home at that time, but Kiavi, now they really came on the scene also with a tech sort of bend to them. And they really, were one of the pioneers in this space from a capital allocation standpoint. And that the difference is availability of capital, right? And boy, I can remember rates being for this type of project. It was a little different because it was mainly some part equity too, but 17, 18% in very good interest rate markets. And so that has materially come down, right, over time.
Now that the space has been discovered
exactly, right.
by
Wall
investors of all
Street.
stripes,
Yeah.
and especially Wall Street,
Yeah.
and insurance companies are buying
Sure.
stuff, the cost of
It's
capital has come
rated.
down.
It's rated.
Yeah.
It's a rated securitization. Our space is.
Yeah.
That was not the way it was in 2016.
Yeah, I mean, there wasn't any securitization.
There was zero. Yeah.
Yeah, that's interesting. We've obviously been expanding the lending side of the business.
Yeah.
A lot of expansion, expanding in a lot of directions. You mentioned institutional capital as a new sort of source.
Yep.
And an endpoint. Without giving away too many secrets, what should borrowers and investors expect to see from Groundfloor Lending over the next year or two?
I would say the availability of exit capital for the projects that we finance. We want to do more of providing that exit capital or liquidity in the form of a longer term loan that would be with one of our institutional forward flow partners currently. We want to do more of that. And we're maybe 1% right now. I would like to get that to 10%.
Some lenders are just
half, more than half.
More than half.
Right. So we're unique in that we're mainly RTL, but I would like to balance us out, and really offer both the investors, right? The investors, when they are repaid, right? That's from exit liquidity, and I want to control that more.
Right. Yeah. I get that. Okay. Let's wrap up with a semi-rapid
Yes, sir.
fire Q&A.
Let's do it.
Try to answer these in a sentence or two if you can.
Okay.
All right. Number one, what is one thing people misunderstand about real estate investors who renovate or build homes?
That it's easy.
That it's easy.
It's very difficult.
Say more.
Experience matters, strangely, right? Like in everything else, experience matters. And I love watching the renovation shows on TV, but it is not that.
Right.
You don't know what is behind the wall. There's a lot of conflict, and I think it's a great challenge, but it's not easy.
Not easy.
Yeah.
Number two, if someone wanted to get started as a real estate entrepreneur today, what's one piece of advice you would give them?
I would invest in Groundfloor REIT and track projects as an experience gauge. There's so much information out there. That's what I would do. And one thing that I did early on is I went to a transitional neighborhood or where there was a lot of fix and flip activity going on. You just pull up to where the pickup trucks are and you just talk to people. There's not a better way to engage in this than to learn from the people who are doing it. And, here's a pro tip, bring lunch and they will talk to you more.
Yes. That's sort of like bringing coffee to the foreclosure auction on the courthouse steps. All right. What's one housing trend you're watching closely right now?
Well, this was not as high on my priority watch list at the beginning of the year, but it's interest rates now. Watching the 10-year kind of become a little bit more volatile recently. And then I mentioned before, when will or if the impact of AI show up in employment, is it as daunting as some have forecasted, or is it not going to be that? I'm doing the best I can to keep track of that. Yep.
You did mention employment earlier as one of those things you're watching this year. And then finally, after nearly a decade at Groundfloor, what still excites you about the mission?
People matter to me. It's the people. Look, if I'm going to exchange time away from my family at a place for, 50, 60 hours a week, or sometimes 40 in late weeks, but I want to be around people that I find inspiring, people that, that I have, a role in their life as their manager. That's important. People matter. That is the core of which I sort of function. It starts with that. And this is great for me because I'm also interested in what is going on. Real estate, investing, it strikes a lot of my interest level. And then to be around the people that I get to manage and then report to, that is where it starts and stops with me. But you have to monitor what you're exchanging your time for from your family, right? I mean, you got to make it count.
Yeah. I do not take it for granted when people spend discretionary time on this business.
Yeah.
And I always hope that it's done in a way that benefits them professionally and ultimately their family.
That's right.
Because that's what we're all here for.
Yeah.
Well, that's great. Thanks, Patrick. We're going to wrap up now. I really want to thank you for taking time
Thank
out of your
you,
day to
man.
join us on our new Beyond the Stock Market podcast.
Amazing.
For our listeners, you can check out all of our podcast episodes at groundfloor.com/podcast. And if you're a real estate entrepreneur who wants to take a closer look at our borrower solutions, Patrick would love that. You can check out options at lending.groundfloor.com. You can fill out a loan application in just a few minutes, and an actual human being will call you and talk to you about your work. I love that. Thank you all for tuning in.